Hey guys, good morning. So we are going to be starting with the quarterly business workshops, and I thought I'll start with the financial space, and I'll take HDFC Bank to be the first company, because I'll tell you why I start with HDFC Bank on every quarter is because of the fact that HDFC Bank sets the tone, right, for the entire banking space. So HDFC Bank's results come out the fastest among all the banks. B is it is a behemoth bank. C, it has done well like for the last 25, 27, 30 years, right? So HDFC Bank is probably one of the best banks in the country. I mean, like, it can also be considered to be one of the best in the world. So HDFC Bank, whatever HDFC Bank says, right, in a conference call, whatever they talk about the economy, whatever they talk about the outlook, right, it should always be listened with a lot of intent, right? This is completely different from saying, for example, like you taking positions in HDFC Bank, right? That is different. I'm going to be coming to that. So on that note, let's start with HDFC Bank. So first is if I give you a certain flavor of like how the bank has done. So the asset book, right? The asset under management or the loan book of HDFC Bank on a standalone basis grew 15.8%. So 16% के आसपास आप पकड़ लो, ठीक है? You would recently see that the merger between HDFC Bank and HDFC Limited has been completed. एकदम हो चुका है. It's absolutely done. And the merged entity grew 13% on a YOY basis, because HDFC Limited has a book of 7 lakh crore and HDFC Bank now has a book of 16 lakh crore. So on a combined basis, the merged entity has a loan book of 23 lakh crore, right? And of course, you understand, right? Like bigger the size of the book, slower will be the pace of growth on that book, right? Because size is a critical factor here, right? Because if you had gone back in history and seen HDFC Bank probably 20 years, 10 years, 15 years back would have grown at a much faster pace. I mean, when I say at a faster pace means the book growing at a much faster pace, right? So now the problem with HDFC Bank is this, right? Okay, like if you're an active investor, right? And if let's say, for example, you're in your 20s and in your 30s, right? You should be coming to the stock market looking for 20-25% CAGR in your portfolio, right? Among that, if you buy, let's say, an HDFC Bank, the problem becomes because it becomes difficult for the bank to grow at that pace, right? And of course, we understand in the stock market, money will always chase the pace of growth. Higher the pace of growth, higher will be the money that you can make in the market. So let's come back to the bank here. So there's one more thing that happened here. Back in 2019, HDFC Bank focused a lot on the corporate side of the book. Okay, they believed the retail was going through a lot of pressure, so they started incremental. I mean, the incremental loans were given to the corporate side. So now what happened is this: when you give out more corporate loans than retail loans, and by the way, corporate book is more than 50% of their total loan book as well, you would see that there has been a NIM contraction. The net interest margin contracted for HDFC Bank to around, I think, 4.1%, which the number was around 4.4 or 4.5% probably 3-4 years back, right? So now what has happened is this, right? This has affected the profitability of the bank. I will do ICICI Bank and Axis Bank later on, but you would see the strategy change here. HDFC Bank focused more on the corporate side of lending in the last 2-3-4 years, whereas ICICI and Axis Bank grew NIMs. I mean, grew NIMs means net interest margin. ICICI Bank's net interest margin went from a sub 4% to around 5% now, right? Axis Bank also the same thing, from less than 3.5% NIM to I think around 4.2, 4.3%. Why did that happen? Because they focused more on the retail side of lending. HDFC Bank focused on the corporate side of lending. So two things I would like to tell you. First is the pace of growth slowing down for HDFC Bank, and the pace of growth slowing down even further for the bank after the merger, right? Because HDFC Limited, the home loan book which is coming into HDFC Bank, right, they were growing even at a slower pace than HDFC Bank. So on a merged entity, it grew only 13% on a YOY basis. Okay, I have my copy, so I ensure that I don't miss out on any other points here. Okay, so let's now directly come to, say, for example, the asset quality. Because see, whenever we are analyzing a bank, we have to look at the profitability metric, we have to look at asset quality metrics, we have to look at the rate at which the loan book and the deposit book is growing. Let's talk about deposits. HDFC Bank is probably doing very well on that front, because if you look at the deposit book of HDFC Bank, it's around 19 lakh crore and they're growing around 20%, 19 or 20% on that book. It shows that the bank doesn't have much problem collecting deposits. If you look at for the past year and a half, this is I think probably the thing that is the most positive about the bank after the results is this. Okay, like there is a war on deposits, right? You see, right? Because there is so much demand in the economy, there is so much credit demand in the economy across retail, MSMEs, SMEs, corporates, right? So banks are looking for deposits, right? Or else what will they lend, correct? So as a result of which you would see the small private banks with a very small book, right? They find it hard to grow deposits at double digit. But HDFC Bank with a deposit base of 19 lakh crores, can you imagine, right? Can grow deposits nearly 20% on a YOY basis. Nothing to say on asset quality, industry leading asset quality with NPA numbers are like sub 2%. And if you look at credit cost of HDFC Bank, it is also around 70-75 basis points, right? Which is 0.7 or 0.75%. So nothing to complain on HDFC Bank. The only complaint I have is on the growth front. But also having said that, ये bank का problem नहीं है, ये size ही इतना बड़ा हो गया है. The size has become so big that the bank cannot grow back to 20, 25, 30% CAGR, which it used to do probably 5, 10, 15, 20 years back. So ये हो गया. Now, every time when I talk about the results of a particular institution, I also attend the con call of that particular company, and then I try to also give out the summary of the con call. So I have the notes with me here. So let me just go through all the summaries here. So first is like the management talks about the merger being complete, right? Merger being complete, and HDFC Limited is now a fully owned subsidiary of HDFC Bank, and along with that you also get HDFC AMC, HDFC Life, right? All these institutions becoming subsidiary of HDFC Bank. The reason for the merger is cross-selling, right? Because if you look at the past, right, 70% of HDFC Limited's customers did not have a bank account with HDFC Bank or did not use any of the HDFC Bank's products. On the other hand, 65-70% of HDFC Bank's customers got home loans from other banks or other financials, right? So now they would want to merge this. Now, when you merge this, some analyst asked Mr. Shashidhar Jagdishan, like, what do you see like going forward the growth rate of the book would be? And he was very clear about it. He said the book is going to grow around between 16, 17, 18%. And when I say the book, I say the merged book, right? Because of course you're going to grow organically, the bank grows organically, as well as because you would be cross-selling, right? Because a home loan customer would now get an insurance, a car loan customer would get a home loan, right? A personal loan customer would get a car loan, right? So the cross-selling franchises go up for HDFC Bank. The other thing that I like about HDFC Bank is like HDFC Bank has been growing its branches at a rapid pace. So I'll tell you this, their branch expansion rate is 18% on a YOY basis. And I think now they have around their total number of branches is 7,860 branches, and probably double the number when it comes to ATM. Why? Because HDFC Bank believes like the credit economy in this country is doing very well. There is huge credit demand. That's point number one. Point number two is the festive season is going to be great. So HDFC Bank is focusing a lot on expanding branches and setting up the infrastructure before the Q3 comes, before the festive period comes, like Diwali, Durga Puja, Dashera and all those things, right? Now here is the thing, I already touched upon this point, right? Why is the pace of growth down? Because of two reasons. A, so of course, like the pace of growth has gone down because of the size. The second reason is the wholesale book of HDFC Bank, which it focused a lot back in 2018, 19 and 20. That wholesale book only grew 11% on a YOY basis, dragging down the entire loan book growth. If you see retail and if you see the commercial banking and rural banking segment, retail grew 20% on a YOY basis, right? Retail means, of course, car loan, credit card, personal loans and all that, gold loan and all that. And if you look at commercial means tractor loans and all those commercial vehicle loans and all that, as well as rural financing, that book grew 29% on a YOY basis. But the wholesale book, which is around 40-50% of the total book, that grew only 11%, just dragging down the entire loan book growth to 15.8% YOY on a bank level. So that's probably about it here. Couple of things other, of course, I would have to discuss is the ROA and the ROE number. So of course, pristine asset quality, pristine balance sheet of the bank. The ROA number is at 2%. Like any financial with an ROA, especially if you're a bank and your ROA is 2% or north of 2%, it clearly shows that your bank has good corporate governance and it has always taken good care of shareholders in the past. It has made good money for everybody in the past. So the ROA is 2% and the ROE is around 17.3, 17.4%. Okay, so one of the things is like one of the subsidiaries of HDFC Bank is HDB Financials. HDB Financials is basically the NBFC of HDFC Bank, which was suffering during COVID, right? Because उस time पे क्या हो रहा था, there was problems in collection, and HDB Financials gave out a lot of loans in the unsecured space, okay, and gave out loans to customers with questionable credit quality and everything. But even HDB Financials have come out pretty strong after COVID, and I can just give you the basic number, right? Disbursements for HDB Financials are now up 42% on a YOY basis, and the ROE number is approximately 19%. And if you also look at the capital adequacy ratio for HDB Financial, it is around 20%. So you can clearly see that HDB Financials, which was struggling during the COVID times, have come out pretty well. Okay, so again, like a couple of things, like even if so now that the merger is happening, what will happen to the ROE going forward? So when this was asked to the management, they said that the ROE will remain around 2% even on a merged entity basis. So that's probably about it. Remember that point I told you, that going forward HDFC Bank, because guidance is very critical for you to make money, right? So if you're looking for, say for example, a 15, 16, 17% CAGR on your portfolio, right? HDFC Bank becomes one of the very good bets in that portfolio. I mean, no stock recommendation. Why? Because I'll tell you one thing, okay? If you're looking for 15, 16, 17% CAGR on the portfolio, that means you double your money in 5-6 years. HDFC Bank can aram se be a big portion in your portfolio, because the management clearly said, right, and I already touched upon this point, right, going forward the loan book growth will be between 16, 17, 18%, right? That's what the management said in the con call. And of course, on the other hand, like if you look at HDFC Bank, it's a strong and a stable franchise, right? But having said that, I'll tell you my thing now, just to finish it off this here, okay, like, see, I am in my 30s, right? And I am looking for a 25-30% CAGR in my portfolio. So I would want my companies to grow its loan book at 25-30% CAGR, right? Although keeping pristine asset quality. So I am not trying to compromise my asset quality by only chasing growth. Got it? I need growth. I need a combination of growth and good asset quality and profitability metrics. Got it? So on that note, I don't find, HDFC Bank to be, a part of my portfolio. But then again, having said that, you really need to know what I am doing as well, right? Or else though it becomes a very biased discussion at the end of the day. So on that note, my job is to give you like all the information, right? And then the decision making is up to you, right? Whether you buy, whether you sell. But all I'm trying to say is like, you buy HDFC Bank, it'll be very hard for you to lose money on this stock. Of course, anything can happen in the future. But having said that, it's very difficult to lose money on stocks like HDFC Bank. But how much money you're going to make in the future is the deciding factor here, right? So if you can lower your expectations, HDFC Bank can easily become a part of your portfolio. But if you have an expectation like me, like 20, 25, 30% CAGR, then you probably have to avoid that bank, which I don't own in my portfolio. And of course, you might have understood that. And of course, you would have to look for something else. So on that note, I think we have covered everything. Let me just go through the pointers once again. Nothing else. Just one last thing, like whether I'll be doing all the other banks, right? I'll be doing around 20-25 banks and the other financials, mila ke kuch 50-55 financials, right? And I start with HDFC Bank. All I can tell you is like that the economy is in a very, very sweet spot. And HDFC Bank, Axis Bank, मतलब कोई भी बैंक आप ले लो, ठीक है? आप देखोगे कोई भी financials आप ले लोगे, the economy is in a very, very sweet spot. If you look at our macro data, like for example the current account deficit, फिर हमारा forex reserve, फिर हमारा GST collection, फिर हमारा pollution, everything is in our favor. Okay, so India is in a very, very sweet spot. HDFC Bank emphasized on it, and of course all the other financials, also most non-financial companies also said the same thing. So I thought I'll end it with this so that you can also have a clear understanding where the general economy is headed. Okay, on that note, I'll end HDFC Bank, and of course I'll be covering the other banks. So every bank will have one workshop going forward. Thank you so much.